Good day everyone. Today we're going to discuss the preparation of cash flow statement or statement of cash flows. Ang tagal kong pinag-aralan itong statement of cash flows na to kasi nung panahon ko wala naman itong statement of cash flows eh. I took the CPA board exam in 1984 at wala pa itong cash flow na ito. Although it was taught to us by our professor in managerial accounting, pero hindi ito part ng mga financial statements na pinapagawa ng mga regulatory bodies. It is only in 1987 that it was officially required to be attached in the reports. So, medyo, I really took time to understand this again, to discuss with you how to prepare this cash flow statement or statement of cash flows. So, we go to what is a cash flow statement. Ano nga ba itong cash flow statement? Sabi dito, it summarizes the amount of cash and cash equivalents entering and leaving the company. It also explains the difference between the beginning cash and the ending cash balances of the business. It converts the accrual basis of accounting into cash basis of accounting. And it measures how well a company manages its cash position, meaning how well the company generates cash to pay its debt obligation and fund its operating expenses. Ano sabi? Una, it summarizes the amount of cash and cash equivalents entering and leaving the company. So, ililista doon kung paano nagkapera at paano ginasta yung pera. And then the second one, the difference between the beginning and ending balance. So, yung kung paano ginasta o saan nakuha yung pera, yung net effect noon dapat mag-equal dun sa difference between the beginning balance and the ending balance of the cash. And then the third one, it converts the accrual basis of accounting into cash basis of accounting. So, kapag kasi cash basis of accounting, nire-record natin yung net income natin on a cash basis. Ibig sabihin, magkano lumabas na pera, magkano pumasok na pera, ang matira, yun ang net income mo. Eh dahil accrual basis yung accounting ngayon, hindi mo na masasabi na yung natira mo ay net income mo. Kasi, hindi naman lahat ng binayaran mo at tinanggap mo ay kinonsider mo na income. Meron kang hindi tinanggap na pero income. Meron ka pang hindi tinatanggap, income mo na. At meron tinanggap mo na, hindi mo pa income in accrual basis of accounting. So, from accrual basis of accounting, gagawin natin cash basis yon para malaman natin kung paano ginamit ang cash at saan nanggaling yung cash. Now, the last one. So, here is the cash account of the Rimacor. The income statement shows the net income of the business. The balance sheet presents the financial health of the business. The statement of changes in capital shows the changes in capital structure of the business. The cash flow statement shows the reasons for the change in the cash balance of the business. There is no need for the cash flow statement if the transactions are recorded using the cash basis of accounting, because the increase in cash will be the result of the business operation that yield net income, and the decrease in cash will be the result of the business operations that sustained loss. However, in the accrual basis of accounting, the increase or decrease in cash can no longer be directly attributed to the net income or net loss. Hence, there is a need to analyze the cash account and find out which of the recorded transactions brought about the change in the cash balance. Each entry is analyzed and classified as operating, investing, or financing transaction. Cash flow statement is merely the cash account entries presented in a report format. instead of presenting the ledger account of cash, a cash flow statement is utilized for a more formal presentation of cash information. So, what is being presented in the cash flow statement is the cash flow statement complements the balance sheet and income statement and is a mandatory part of the company's financial report since 1987. Purposes of cash flow statements are it allows investors to understand how a company's operations are running, where its money is coming from, and how money is being spent. The cash flow statement is important since it helps investors determine whether the company is standing on solid financial ground. Creditors, on the other hand, can use the cash flow statement to determine how much cash is available for the company to fund its operating expenses and pay its debts. The balance sheet, income statement, and statement of changes in capital are prepared since accounting system was introduced. The cash flow statement was just required in 1987. Maybe because the transactions during the earlier times were mostly on cash basis, and cash analysis can be performed on these three financial statements or from the cash account ledger, with transactions becoming more complex and the accrual system of accounting becomes the generally accepted method. The need for a more detailed analysis of cash with the use of cash flow statement became a necessity. So, 1987 lang ni-require. Kasi nung araw, hindi pa naman masyado, meron pang option gamitin yung cash basis of accounting. Pero ngayon mandatory na as generally accepted principle ang paggamit ng accrual basis of accounting. Therefore, hindi na ma-determine from the net income yung cash. No, kung gagamitin ay cash basis, kung ano yung net income, yun din yung increase ng cash. Kung ano yung net loss, yun ang net decrease ng cash. Kasi cash basis eh. Pero because accrual na yung widely used method of recording transactions, hindi mo na malaman ngayon kung yung net income ay net cash. So we have to reconcile all the transactions that will affect the cash inflow or outflow to determine kung magkano ba ang talagang pumasok na pera at magkano ang lumabas na pera dun sa business. So here is a simple illustration of how the cash flow statement is prepared based on the basic accounting equation elements. So we have the assets is equal to liabilities plus capital. We're using the same equation elements. This time we classify assets into current assets and non-current assets. Transactions involving current assets are classified as operating activities, except for the marketable securities. So, transactions affecting non-current assets are classified as investing activities, including transactions on marketable securities. Transactions on liabilities and equities are considered part of the financing activities. So, madali lang. Ika-classify lang natin yung cash transactions into operating, investing, and financing. Pag sinabi mong operating, current asset transactions yon, except marketable securities. Kapag sinabi mong investing, non-current asset transactions plus marketable securities. All the rest, liabilities and equity transactions will be part of the financing activities. Now, the operating activities on the cash flow statement include any sources and uses of cash from business activities. In other words, it reflects how much cash is generated from a company's products or services. Generally, changes made in cash, accounts receivable, depreciation, inventory, and accounts payable are reflected in cash from operations. So, current assets included lahat except marketable securities that form part of the operating activities. Take note of the accounts receivable, cash, depreciation, inventory, accounts payable. These are all current assets and current liabilities. Operating activities examples include receipts from sales of goods and services, interest payments, income tax payments, payments made to suppliers of goods and services used in production, salary and wage payments to employees, rent payments, and other types of operating expenses. In the case of a trading portfolio or an investment company, receipts from the sale of loans, debt, or equity instruments are also included as part of operating activities. Kasi yun yung services nila and goods na binibenta. So, part of their operating activities. So, here's the illustration of the investing activities. So, our non-current assets, investing activities. Cash flows from investing activities provides an account of cash used in the purchase of non-current assets or long-term assets that will deliver value in the future and the cash generated from sale of these assets. Examples of investing activities. So, proceeds. So, this is the we wait for this one. Okay. This is the illustration of financing activities. Cash generated or spent on financing activities shows the net cash flows involved in funding the company's operation. So the normal sources of company's funds are liabilities and equity. So if the cash came from here and applied for this, came from these sources and applied to these sources, then these are part of financing activities. Examples of financing activities are dividend payments, stock purchases, bond offerings. When it comes to sole proprietorship and partnership, we have the drawings or withdrawals and additional capital or additional investments by the owners or partners. There are two methods of presenting cash flow statement. One is the direct method, which is not commonly used, although preferred by the international accounting standards. And the other one is the indirect method, which is commonly used by the business because it is much easier to prepare, although not as detailed as the direct method. The direct method provides a much detailed basis for analysis of cash transactions and their effects on the net increase or decrease in cash. However, this is not commonly used because it is not easy to prepare. All cash transactions have to be classified from the original source of data, which is the cash account ledger. The indirect method, which produces the same net cash flow, is much easier to prepare because this will only require a balance sheet or trial balances from where the beginning and ending balances of possible cash transactions can be deduced or taken from. The primary purpose of the cash flow statement is to explain the net increase or decrease in cash. Therefore, the calculations, whether using the direct method or indirect method, should result in the same net increase or decrease in cash. So here is the illustration of a direct cash flow statement from the entries on the cash ledger account. The sources and application of cash are analyzed and classified as to operating, investing, and financing activities. So this is wrong, provided by financing activities. This should be provided by financing activities. You can see from the ledger account the transactions on the different aspects of cash movement. Let us consider for purposes of discussion that the January transactions are the only transactions of Terimakor for the year. So this is the cash received from customers. The cash received from customers came from unearned revenue, accounts receivable, and sales. So these are operating activities. Now we have payments to suppliers. So this would come from the credits of the cash account. So yung sources of cash receipts are on the debit side and the payment for expenses are on the credit side. So we get here payment to suppliers, 70,000. Payment to salaries of employees, for salaries of employees, 120,000. Payment for interest expense, 12,000, and payment for income tax, 9,000. So these are cash outflows from operating activities. The net effect is 229,000. Now, the investing activities, ang sabi natin ay non-current assets. So, there was a decrease, there was an increase in non-current asset, which is property, plant, and equipment, 300,000. And then, this common stock is an equity account. So, we have 100,000 as part of the financing activity. So, the net inflow during the year is 29,000 using the cash flow analysis on the cash account ledger. Now, the beginning balance of the cash is 501,000. So that is the beginning cash balance. And the ending cash balance is 530. The difference between the beginning balance and the ending balance should reconcile in the result of the analysis of cash flow. Kapag hindi reconciled yan, mali yung cash flow statement. So, ang ating babanggaan na amount ay ang net increase or the difference between the beginning and ending cash balance. You will know that your cash flow statement is correct when you have the same balance or when you have the same difference. Due to this is a more uh, clean presentation of the cash flow statement. Clearer. Let's take the illustration of the indirect method of presenting the cash flow statement. So here is the illustration of the indirect method of cash flow statement. The sources of data for this kind of presentation is the comparative balance sheet. So from the comparative balance sheet, you will get the increase decrease. Here we have the increase. Is it really increase in accounts receivable? I think it's decrease in accounts receivable. This is wrong. This should have been decrease in accounts receivable. So when you say that there is a decrease in accounts receivable, it means that there was a collection of cash. So cash increased. That is why it is a positive cash effect. It is a cash inflow. So it should be added to the net income. So this net income is taken from the income statement. So the income statement and the comparative balance sheet will be the necessary tools in the preparation of an indirect cash flow statement. So 32,000 net income will be adjusted according to the increase-decrease found in the comparative balance sheet. This decrease because it is 50,000 in 2018 and then 20,000 in 2019. The decrease in accounts receivable means that there was cash collection. So it is added. The increase in inventory meaning you apply more cash to this. So this is a negative 40,000. Increase in accumulated depreciation, meaning you recognize depreciation expense, which is not required, which did not require cash. So to adjust the cash net income into a cash basis, we have to add back the depreciation expense. Increase in accounts payable, meaning to say you generated more cash. You get the merchandise without paying cash. Therefore, when you sell it, you have more cash. So it should be a source of cash. Increase in wages payable is also a retention of cash. Therefore, it is added to the net income. Decrease in interest payable is an application of cash. So the net income should be reduced by this. The decrease in income tax payable is an application of cash. Therefore, it should be deducted. An increase in unearned revenue is a collection of cash in advance. Therefore, it is part of the cash. Meaning to say, here we have a net income that is stated in an accrual basis. Now, the target of the cash flow is to present that net income in a cash basis form. So, lahat ng mga accrual basis affecting net income, accrual basis transaction affecting net income, i-adjust natin para makita natin yung cash basis income natin. So, these current transactions are part of the operating activities. So, the total of this increase-decrease in cash is a net increase of 197,000. This is an operating activity. So this is the result of the operating activity. Then we have the purchase of plant and equipment, which is a negative cash flow because bumili lumabas yung pera, it should be deducted. And then we have a common stock issued, which is a positive cash flow because it is an inflow of cash. So we have to add to the net income the inflow and deduct from the net income the outflow. So we arrive at the net cash inflow during the year at 29,000 pesos, which is the same with the indirect method. So Whether we're using the indirect method or direct method, we have to arrive at the same answer because this is the difference between the beginning and ending balance of the cash account. Now, with regards to the presentation, you will notice that in the indirect method, there can be very little analysis because you have to think of or analyze. You have to deduce only. You have no direct information as to the actual reason for the increase in cash or decrease in cash. You have to deduce. Kumbaga, hindi diretsahang sinabi na, bumili ng inventory. Hindi sinabing bumili ng inventory eh. Nag-increase yung inventory. So, ano ibig sabihin na nag-increase yung inventory? Hindi ka bumili ng inventory, nag-increase yung inventory. Therefore, hindi ka, nagkaroon ka ng application ng cash. Pero hindi mo alam yung actual amount ng inventory na binili mo. Ang nakita lang ay yung increase ng inventory. So the International Accounting Standards really favor the direct method of presenting cash flow. Kaya lang matigas yung ulo ng mga accountants kasi mas madaling i-prepare ang indirect method kasi manggagaling yon sa comparative balance sheet. Available na yung data mo for analysis. Sa sa direct method, kukuhanin mo pa dun sa ledger ng cash account, ng ledger ng cash yung yung mga detalye ng cash flow statement mo. Kaya ayaw gawin yan ng mga accountants kasi matrabaho. Pero, yun yung tunay na magbibigay sa'yo ng tamang analysis. At saka hindi mahihirapan yung user. Kasi diretso nang sinasabi dito, matataranta pa yung user ng financial information Increase in accounts receivable, sasakit pa ulo ng tao, mahilo-hilo pa. Siguro, kung matyaga yung accountant, ang gagawin niya talaga na financial na statement of cash flow ay ang direct method for the benefit of the user, not for the benefit of the one who prepares it. Kaya yung magagaling na accountant, ang gagawin nun ay yung direct method. Pero yung mga tamad na accountant, indirect method na lang kasi pareho rin lang naman yung resulta. Pero hindi yun sa resulta Nasa kung paano mo gusto ma-inform yung babasa ng financial statement mo. Kung gusto mo bang maunawaan ng babasa ng financial statement mo yung trabaho mo, di gawin mo yung mas maganda. Kasi mas mauunawaan. That is the direct method. At yun naman ang pine-prescribe talaga ng International Accounting Standards Board. So, medyo na-late yung araw natin. So, ito na yung analysis which I have explained kanina, yung indirect method. Isa-isa lang dito sa presentation na ito. Medyo naglo-loading pa itong aking presentation. Okay. The indirect method also makes adjustment to add back non-operating activities that do not affect a company's operating cash flow. Sabi, as example, depreciation, which has been deducted from net income but does not really have cash outlay. So, na-explain na natin yan kanina. Itong depreciation, i-add back natin kasi dideduct yan sa net income. Wala namang cash na involved. Then, may mga araw-araw to Wala nang araw-araw. Ayaw, may epekto ng araw. So, it is an account. Teka, ano pa yung next item? The change in accounts receivable. Okay. The change in accounts receivable from beginning to end of the period is also reflected in cash flow. If account receivable decreases, it implies that more cash has entered the company from customers paying off their credit accounts. The amount by which accounts receivable has increased is added to net income. On the other hand, if account receivable increases, the amount of the increase must be deducted from the net income. So in our illustration, there is a decrease of accounts receivable. That is why it is being added. So wrong itong ating increase na word dito. It should be decrease. That is why it was added. Inventory naman tayo. So, an increase in inventory. Ito yung 40,000. An increase in the inventory, on the other hand, signals that the company has spent more to purchase goods or materials. If the inventory was paid with cash, the increase in the value of inventory is deducted from net income. A decrease in inventory would be added to net income. If inventory was purchased on credit, an increase in accounts payable would occur. So we have here accounts payable. And the amount of increase from beginning to the end of the year of net income. So what would be the effect of the accounts payable? The accounts payable here increased. So the increase in accounts payable is a source of income. So the same logic holds true for taxes payable, salaries payable, and prepaid expenses. If something has been paid off, then the difference in the value owed from beginning to end of the period has to be subtracted from net income. If there is an amount that's still owed, then any differences will have to be added to the net earnings. So if the accounts payable, let's see, interest payable decreased. So it is an application of cash. So it is deducted from net income. The same thing with income tax payable. Now, increase in accounts payable is a source of income because you withhold a source of cash because you withhold cash, you do not pay. So that will be added to net income. Medyo mahirap unawain pagka indirect method, no? Parang pag nagbasa ka, iisipin mo pa anong epekto nito. Yun yung sinasabi ng ay International Accounting Standards. Mas maigi gamitin yung direct method for the benefit of the reader. Ito, iniintindi ko yung indirect mahirap. Kung ako yung magbabasa. Pero kung ako yung gagawa, madali. Kasi kailangan ko lang nitong comparative balance sheet and income statement, then increase-decrease lang. Alam ko naman, pagka-increase, ganito. Pag-decrease, ganon. Pero paano dun sa ordinary yung babasa? Hindi niya maiintindihan. So, yung mga effects ko, ngayon lang lumalabas. I'm trying to improve on my presentation, parang hindi nag-improve. Go to the next topic. So this is a more clear presentation of the statement of cash flow. At the end, the ultimate purpose of the cash flow statement is to convert the accrual financial income into cash income, meaning to say, the income using the accrual basis of accounting is set aside and the income using the cash basis is presented. The same net income based on cash should be arrived at, well, the same net income based on cash analysis should be arrived at using the indirect or direct method of presenting cash flow. Hindi kailangan mag-iba yung amount kasi cash flow yung direct method ang ginamit at yung isa ay indirect method. No. It has to arrive at the same uh, net income. Because yun yung target natin, ma-explain saan galing yung net income na yun. Ito, increase in accounts receivable, increase in inventory, increase in accumulated depreciation. Hindi mo alam kung i-add mo pa o hindi. So, this one is wrong. This should be decreased in accounts receivable. So, that ends our discussion on the cash flow. Ang summary lang niyan ay, let's recapitulate our discussion here at the end. We have to summarize our discussion in the cash flow kasi ito yung medyo hindi familiar pa yung iba at hindi rin common na pine-prepare. Kasi mga maliliit na business, hindi naman nagpe-prepare usually ng cash flow eh. Yun lang mandatory na 3. Pero for managerial purposes, magaling din na gamitin tong cash flow. It's parang namalengke ka, no? Pag namalengke ka, may dalahan pera. Lahat ng hawak mong pera, lilista mo isa-isa. Saan mo, ano-ano pinamili mo. And then titignan mo, ano-ano ba napamili ko at the end of the day. Tama ba tong mga napamili ko o mali? Ganon din yung cash flow eh. Tinitignan mo saan napunta yung pera mo. Ano mga pinagbibili mo dun sa perang tinanggap mo galing sa business mo. Yun yung purpose ng cash flow statement. So, meron kang beginning cash, meron kang ending cash. Saan napunta yung pera? The difference between the beginning and ending cash. So, kung magaganda yung mga napuntahan ng pera mo, then magaling ang management. Pero kung hindi tama yung napuntahan ng pera, hindi magaling ang management ng pera. So this talks about how money is being handled by the business. Kasi kung paano mo ginagastos yung pera mo, paano mo ganun mo rin ini-improve yung business mo. It's the same thing with life. Kung paano mo ginagastos ang oras mo, ganun mo rin ginagastos ang buhay mo. Dahil ang oras at buhay mo ay pareho lang. So kung ginagastos mo ng maganda yung oras mo, pinapaganda mo yung buhay mo. Pero kung winawaldas mo lang yung oras mo, then winawaldas mo rin yung buhay mo. Pagkakaiba ba ng business sa tao? Wala naman, pareho lang. Kaya lang, ang tao may physical existence. Ang business is an idea. If you find this video as something that has added to your knowledge and increased your curiosity for learning accounting, then please like and subscribe my channel so that you will be updated with the latest presentation that I'll be having in the future. After this cash flow statement, I will be coming up with the closing entries. And after closing entries, reversing entries. So the whole accounting cycle is presented in this channel for now. Thank you. God bless. Keep safe until we see each other again in the outside world.